In this video, we want to talk about Micron technology, and on the weekly chart, last week price declined after announcing their earnings. And for this week, we have a indecision candle, meaning the buyers nor the sellers are in control. And rightfully so, price is at a key level at the $130 level, which was previous all-time highs back in April of this year. Typically, all-time highs, and once you breach it, well, you're breaching resistance. Typically, resistance becomes support, and that's kind of where price action is at the moment. Looking at the 4-hour chart, this is the collapse on earnings on very high volume. And what I would like to see is confirmation that price wants to move higher. I want to see above average buying pressure before I'm convinced that the lows are in and that the buyers are now back in control. Before we continue with the analysis, let's look at this article. It is coming from the Motley Fool. One reason to buy, one reason to stay away. So shares of the memory chip manufacturer Micron have surged over the past year as a brutal industry-wide downturn came to an end. Demand for the high-speed memory used in AI accelerators is soaring. The PC market has bottomed out and returned to growth, and memory chip prices are recovering. So here's one reason to buy. The immediate impact of the AI revolution for Micron is increased demand for high bandwidth memory, a type of memory chip that's commonly used in AI accelerators. While it was a bit late to the HBM party, the company is now ramping up production. HBM revenue topped $100 million in the third quarter and is growing fast. In fiscal 2015, Micron anticipates a few $billion in revenue from HBM. Demand is so strong that Micron is sold out of these chips through the end of calendar year 2025. This is probably should say fiscal 2025. Now, one reason to stay away. The memory chip industry is prone to booms and busts during periods where demand outstrips supply. Prices rise and boost profits. Manufacturers expand production to take advantage of that demand, eventually pushing supply above demand. Pricing falls, production is cut, and profits plunge. It's all about the supply and demand equation. There's a shortage of HBM chips right now, and estimates for growth of the AI accelerator market are in the stratosphere. If those estimates are even slightly too optimistic, the production ramp up going on right now would eventually push supply and demand beyond demand. In other words, a shortage followed by a glut. So the company is benefiting from the AI boom, but the stock could be getting ahead of itself. In terms of the price to sales ratio, Micron shares are the most expensive they have been since the dot-com bubble. Revenue and earnings could surge from here, but the stock already has quite a bit of growth priced in. Expectations are running high, making it a risky bet. So the only thing not making Micron a risky bet is, again, prices are at this resistance support band. And if we scroll down to the hourly chart, we can see late day Friday we had a sell-off on high volume. So what I want to see is buying pressure on an equivalent high volume bar, and that would be an early indication that price wants to reverse. However, let the dust settle before considering going long. Thanks for watching. Subscribe. Please like the video.